Welcome to Satish Speaks channel. Today has been an unprecedentedly busy day. Whenever the market is down by 2%, the two things eventually happen. Number one, lot of customers gets panic and they start messaging you saying that is this a fall, starting of a fall, or the market is overvalued, what should I do? They get panicked, number one. And of course, the investor, the long-term investors, I am an investor for myself. I'm a market analyst and an investor. I do invest, and it's a busy day when the market is corrected by 2%. Of course, you'll be following certain chart, and there's a good opportunity market has been throwing by. So two things are simultaneously happening. Today, the market has been closed with 17,416 point Nifty 50, down by 2%, 348 points down. Not only Nifty 50, the bank Nifty, the auto, reality, PSU bank, most of the categories are in deep red. In this video, I'm going to explain to you why this correction is happening, number one. And what are the levels has been watched out for, because 17,500 was a great support to Nifty, and that has been broken today. And what are the next two levels, support levels, that we will see. And third important question, what an investor should do: should you go purchase stocks, mutual fund, or you should actually wait for market to fall further? So these are the three things we will witness. Number one, first let's understand what is the fall, correction, crash, or bear market, because many investors get panic if the market actually closes with 2% in rate. For example, anywhere the market is down by 0 to 5% is just a dip. We call it as a dip. That fall is called as a dip. Anywhere between 0 to 10%, then it is called as a correction. Anywhere if the market is falling from the peak to 20%, the current level, if the fall is 20%, then it is called as a crash. Today is not a crash. Today what happened, it's like we are just entering to a correction phase, because from the peak level market has actually come down by 5%, so it's not a crash actually. And anything more than 20% of fall from the peak level, then it is called the bear market. So many customers are get panicked and they have started messaging me, what should I do with my investment, what should I do now with the portfolio? Number one, please do not get panic. I already posted a video on November 1st, 3 weeks back, and I have mentioned about that levels of the market are definitely high technically, but India is a market which is fundamentally a, a, a excellent market. We are in a very sweet position for the next 5 years, 5 to 7 years. The fundamentally, micro and macro fundamentally, we are poised for an economic growth, and we are in a very sweet spot. There is nothing, there is no economic factor can deny this. But this 5% fall is very normal, considering we are at the historical high, 52-week high, and the market has been raising from April to November onwards. It has been touching the new heights every month. So this is definitely a normal. Number one, what is the reason behind this fall? Just because FIIs are selling continuously, that is the biggest attribute for this fall. And FOMC meeting, the federal meeting, is supposed to happen this weekend. And if there is any hike is happening, the interest rate is hike is happening in the US, that may trigger one more kind of a fall. So those are the sentimental reasons the market is actually falling. FIs are pulling down the money. And of course, the another negative sentiment is that the Saudi Aramco deal versus Reliance. Aramco supposed to invest 1.7 lakh crores with Reliance, 20% of disinvestment. That has been, the deal has been called off, and that has been definitely a negative trigger for the market, of course. So these are the two reasons why the market is actually dip, facing 5% of correction from the top level. Number one. Number two, 17,500 was the biggest support level that has been breached today, and today the market is at 17,416. The next two support levels to be watch out for is 17,250. That is the next support level, and if the market breaches that level, and the third support level is 16,700, and there is a big gap between 17,200 to 16,700. I foresee that it should not happen, because when that happens, we will be slowly going into a bearish phase. Most likely that should not happen, because there's a very good chance that we can bounce back, and the next resistance level is around 17,600. So currently we are at 17,400. The next resistance 17,600. If we are bouncing back, coming back to 17,600, there is a very good possibility that we can go up from this level. The third thing, that what an investor should do at this point in time, I actually mentioned about booking profits, because you are an investor that you made somewhere between 40 to 50 percentage of the profit. If you are a direct equity investor in your portfolio, if you are a mutual fund investor, easily you would have made 30 to 40 percentage of profit. I already given an indicator, that recommendation advisory to book profits in my earlier video, which I have posted on November 1st. If you go back to my video, if the market has been overvalued, yes, technically the market has been overvalued, considering PE, considering GDP to market cap. These are the indicators showing that the market has been overvalued short run, on a short run, technical feature. But micro and macro fundamental, India is in a very sweet spot for next 5 to 7 years. So as an investor, when the market has been corrected by 6%, 5% from the peak level, what we can do? If you identified any equity stock, very high conviction equity stock, one or two stock, definitely it's a good time. Go purchase that stock. Not as a lump sum. What you can do is, whatever the money you wanted to buy that particular stock, split it into 5 or 7 regular intervals, and then you can actually buy regularly between November to January. Split it into fortnightly, buy fortnightly, so that irrespective of market is going up or going down, you won't regret your decision. So if you are a high conviction customer following a fundamental and comprehensive analysis of a particular stock, it's a good time, definitely go buy. If you are a customer that having a cluster of stocks, maybe 8 to 10 stocks, you have already identified, you have a portfolio and you are building a portfolio, definitely it's a good time. Maybe 20 to 25 percentage of purchase, you can do it now, and rest 75 percentage of the money, split it again into 5 to 7 regular intervals. Split your investment between November to January 15th, and then you start making purchases. You will definitely will not regret, because for next 5 to 7 years, definitely India is in a sweet spot. If you identify the best stocks from the market, there are 10,000 stocks in the listed in the market, and actively trading stock is around 1,500. And if you identified 8 to 10 stock from actively trading 1,500 stock, definitely you won't regret for next 5 to 7 years. Traders, please avoid this recommendation, because investment is completely different from trading. For trading, 0.5 percentage of volatility, less than 1 percentage of volatility here and there, it makes a huge difference in the life of trading. It will give enormous profit or enormous loss for 0.5 percentage of volatility. So traders, please avoid this particular recommendation. So even if you wanted to participate in mutual fund, this is definitely a good time. As I said, that 25 percentage of the money you can invest now, and rest 75 percentage of the money, please, according to your asset allocation. If you have not made your asset allocation even in mutual funds, definitely you are not going to reduce the risk. So first, get the asset allocation right, and then invest 25 percentage of your money now, and 75 percentage of your money, split it into next 2.5 months. If you do this strategy, I am sure that you will make good profits for next 5 to 7 years. I am Satish, financial consultant and author of this book called Untold Wealth Secrets. If you need any recommendation, advisory on equity, mutual fund, portfolio construction, my WhatsApp number is there. Go to description, see. And if you like this video, if you like this content, please click the like button now, because when you click the like button, the chances of hit reaching many more people are very high. So please click the like button and stay tuned to my channel. I'll be bringing much more interesting contents like this. So if you want to join my free WhatsApp group, again, the link is there. If you wanted to make investment in a mutual fund or open a free demat, that link is also available in the same description. So stay tuned to my channel. I'll see you with another interesting video on stock market and mutual fund investments. See you. Bye-bye.